Very good afternoon and good morning. Welcome to HYCM's webinar live market analysis with myself, Giles Coughlin. I'm the Chief Currency Analyst here at HYCM. And I'm just looking forward to taking us through the coming week. I'm just going to give folks a moment to come into the webinar. As we're coming into the webinar, just got to run through the normal disclaimer here at HYCM that the whole purpose of this webinar is to help you look over the shoulder of someone with a professional trading background so you can see how I go about making my trading decisions, so that can inform you to make your own trading decisions. None of the different currencies or commodities that I'm talking about are invitations to sell or to buy, even though we talk about stops, entries, exits, etc., etc. It's mainly from an educational perspective, so it can help you in your trading as you take it forward. So some people get confused and they just think, because I talk about one currency or one commodity, that means that's a buy or a sell for all time. No, we're talking about different market shifts and the market changes from moment to moment, which is why you need to be able to make your own decisions on that. Okay. As we get started, we can see that risk sentiment on this week is very firmly on to the upside. Now, the market started risk on, and that was a follow-through from last week's excellent vaccine news from Pfizer and BioNTech, that they had a vaccine with an over 90% efficacy, and it was expected to be rolled out to the world's population, and the equity market shot higher last week, as you remember. Now, just before coming onto this webinar, literally 15-20 minutes ago, the new market news has come out from Moderna, and they are announcing that their vaccine has an even better efficacy rate of 94.5%. So, for every 20 people treated, that's around 19 people who the vaccine's being effective for. So very, very good. And it's excellent news for global risk sentiment. They also, if you notice, announced that their vaccine has a longer shelf life, and importantly, it can be stored at refrigerated temperatures. Now, the Pfizer-BioNTech vaccine, that was reported to be needing -70 degrees refrigeration and -70 degrees transportation. So fantastic if you're in the cooling industry, but this Moderna news is even better for the world's population, because a fridge is much more common than a fridge that goes down to -70. So that has seen some strong impulses back onto that risk on sentiment that's just come through. Now, remember last week, it was November the 9th, it was this headline, the Pfizer and BioNTech vaccine, that boosted risk sentiment. We now, just a week later, have Moderna's news out as well, and it's even better news. So we are seeing clear risk on sentiment in the markets. Now, it's always good for you to be able to recognize when the market's risk on or when it's risk off. So we're going to run through this so we can recognize it together. In a risk on market, we expect the following thing. We expect the VIX to be lower. So we're going to go over and we're just going to have a look at the volatility index. And I'll just show you the other screen. And I'll run through these so we don't have to go through, you don't have to switch between screens over and over again. So I'll show you the right screen, that would help. There we go. Okay, so this is the volatility index. We'll just drop down to the intraday chart because this news has just come out. And we saw that as the news came out, the VIX gapped to the downside from around 23.7 down to around 23.1. So we've seen volatility dropping, and it has been dropping since last week. We had the 9th of November. Where was the news? Here it was. We saw VIX pressure to the downside from last week, and we see further gap to the downside on this news. That was it. That was the VIX dropping last week on that Pfizer BioNTech news. Right, more gap to the downside. We'd also expect to see stocks rallying. Now, I'm looking here at the futures markets, and you can see a push to the upside. Dow, S&P 500, Nasdaq. This is not a surprise to the Nasdaq dropping, because it means those stay-at-home stocks like Netflix, Facebook, Amazon, Google are likely to see less demand for their services. So the tech-heavy Nasdaq has dropped lower, not a big surprise. But the S&P 500, Dow, Russell 2000 was shot higher as well. That's all good news for those. DAX, Eurostox, ASX, FTSE all ripping higher on the session. Great news. Risk on. We expect commodities to rise. So we'd expect to be seeing upside in oil and copper. We just have a look at the oil markets here. Just look at oil. See US oil, yeah, ripping higher over that near-term support level. Copper, again, you can see that broadly supported. Copper remains supported by positive news coming out of China. Let's just see if I can, where is it? Yeah, positive news came out of China earlier in this morning. You see the industrial output 6.9% versus 6.5% to the upside. And, you know, that's 1.8% urban investment versus 1.6% expected. So that boosted copper prices higher earlier in the session. We'd also expect to see bond yields rising. And now when these bond yields rise, that's because their prices are falling, okay? So there's an inverse correlation between a bond yield and a bond price. So this yield pushing to the upside is a typical risk-on move, and that's a good confirmation of this risk-on move when we're seeing that yields are rising as stocks are rising. We'd also expect to see broad strength in the commodity-based currencies. Aussie, New Zealand dollar, CAD. We expect to see strength in those. Lo and behold, see Aussie, CAD, New Zealand dollar. You know, good strength in those, and we're also seeing weakness rather in Japanese yen and Swiss franc. So strength in the commodity-based currencies, weakness in the safe haven currencies. So that is exactly what we expect for a risk-on market. That means for today, we're anticipating upside in the Aussie yen. Okay, it's a great go-to global risk currency. So any retracement back down to that 76.30 region can be considered suitable for buying, and looking to take profit up at that 77 handle. Okay, so looking anything here, 76.30, 76.40, drop here, take profit there. Medium-term swing, if we did see a deep pullback down to that 75.50, that would be a great place to go long. See, it's a really nice demand level here, where we got that strong demand. Lo and behold, when was it? 9th of November last week. So this is the area for medium-term swing trading. This is the area to enter for intraday trading. Okay, so that's what we're looking at heading into the markets this week. Positive risk on, and Tuesday is a very good day for market volume in equity and futures markets. So would expect this positive sentiment to last into Tuesday as well. So any dips in the futures markets can be considered excellent opportunities for buying today. If we just take a look here, I will find it properly. Right, so looking at equity futures, yeah. So DAX, you know, any retracement down to that pivot point, excellent. R1 for the FTSE 100, R1 for the AXX, R1 for the Euro stocks, R1 for Dow Jones. I put one a little bit lower on the S&P 500, but probably would get some support there. Let's just see what we're doing at in terms of, let me just take a look at this from a deeper. Yeah, that's no problem at all. Yeah, so ideal would be that 3.5, you know, 3.580, 90 level would be ideal for sort of a trade for tomorrow. Yeah, I think that's where I'd go for on the S&P 500, that 3.590. Obviously, all of this depends on that risk on sentiment remaining, but there's no reason why it shouldn't last with more positive vaccine news. Don't forget you can ask questions during the session. Put it in the question and answer box, which is on the GoToWebinar Control panel. It's under questions. And I will also, yeah, that's fine. No, just under the question and sorry, also the chat box. So you've got both of those options for asking questions or just making sure they're open my end in case anyone would ask a question. So that's the mood we're in at the moment, that very positive risk sentiment mood. So an exciting time for a potential intraday trade today. Now, we're going to look at the week ahead. Coming into the week, it's quite a light data front, but there's two really big opportunities this week. One is with Brexit, and two is with the Reserve Bank of Australia. Now, we've had some comments out from RBA Governor Lowe. He hasn't said anything that we weren't expecting. The big picture with the RBA is that they, after their latest rate move, a couple of weeks ago now, they have indicated that they are at the bottom of their interest rate move. They're at 0.10%, and they're not expected to cut interest rates further. And although Governor Lowe said he would consider cutting interest rates if other central banks did, the basic understanding is that Governor Lowe has kept interest rates at that 0.10% and is not planning to go negative. So the RBA has kind of reached that floor. So it'd be very interesting to see what's been going on in the minutes, and that can potentially impact the Australian dollar. Also, we have Governor Lowe speaking on Tuesday after the minutes, as well as employment data on Thursday. Now, the RBA are expecting employment data to sort of pick up. Now, the unemployment rate is expected to come in at 7.1%. Obviously, the lower that comes in, the better. Okay, so you can see the forecasts have actually been consistently higher. And the RBA mentioned in their minutes, not their minutes, they mentioned their last monetary policy meeting rather, that they've been, pleasantly surprised that the risks are not as tilted to the downside as they thought. So 7.1% expected. So anything below that, 6.8, 6.7 is going to be excellent for the Australian dollar. Also, don't forget the employment change figure. That employment change figure has been dropping, which is what we'd expect. But we're looking for a positive number, minus 30,000 expected this time. Positive number would be positive for the Australian dollar. And we want to see as many full-time positive employment data points as possible. So that's really one thing to be keeping a careful eye on for the Australian dollar. And we're taking those as a whole. So as long as the RBA maintains the situation, they're not anticipating going to negative interest rates. So two speeches from Governor Lowe, one out the way, one more to come. Monetary policy meeting minutes, as long as they're broadly supportive, which there's no reason why they shouldn't be, then we would anticipate further upside in the Australian dollar. And then a key data point will be this Thursday, November the 19th. Good data there. I think below, 7.1 and below. So anything sort of 6.9, 6.8 would be excellent. Employment change, that could be a positive number. That would be excellent for the Australian dollar as well. So that's a key one to be looking at for the Australian dollar. We now also have Brexit news. Now let's just have a look at the. We'll have a look at the pound. Looking at the pound, what we can see in the pound is that the pound has just been steadily moving higher since middle of 2020. And what's happening is that the market has been pricing in an EU-UK trade deal. Expectations are that the UK and the EU will get a deal done. Now, money markets, the Commitment for Traders reports, has the lowest position of pound shorts for some time. I think shorts are around 7,000 contracts short at the moment, which is one of the lowest amounts of shorts there's been. And implied volatility in the pound is dropping. So in other words, the risk is firmly tilted to the downside. Market participants are expecting a deal. So what that means is if there isn't a deal, there's a lot of opportunity for downside in the pound. So this is what you want to look out for. There's four main players in the Brexit negotiations. It's PM Johnson, it's von der Leyen, and then it's Michel Barnier, and then it's Mr. Frost from the UK. So they're the four major names: Johnson, von der Leyen, Michel Barnier, and David Frost. Now, if we have positive comments from any of those four, and when I say positive comments, there's some key issues that need to be decided. And those key issues are on state aid, they are on fisheries, and they are on financial equivalence. They are the main issues that the market has still not, that the EU and the UK have still not found agreement on. Okay, so it's state aid, it's fisheries, and it's the financial equivalence. And the best opportunity for sorting these out is now between now and the end of this month. So we're now in this 2-week window period where it's really key for the pound to actually find some EU-UK breakthrough. Now in the UK, two key characters have just left. So Dominic Cummings has left the UK government team. And he was one of the firm Brexiteers that really wanted to see the UK leave the EU. He has now disappeared. So the chances of a no deal are seen as having shrunk a little bit with Dominic Cummings' exit. So what we're looking for is, if we get an official walking away from the EU-UK trade deal, that would be the best opportunity and result in pound being sold. So you'd expect the pound to move down to that 1.20, 1.220. So that's a key one to be looking out for. The second thing, opportunity we're looking out for, is if a deal is struck. Now, because most market participants are expecting a deal to be struck, we would still expect upside, but less upside than we got in 2019 when it was kind of announced that there was going to be a deal done. We saw some pretty strong upside around 2019 on that expectations of a deal. We would expect to run higher up to that 1.3500 level, but then there's a little bit of a question mark as it comes into that overhead resistance where the pound would go next. So remember, the biggest opportunity is to the downside of the pound and in those Brexit negotiations moving forward. Going back to the calendar, another key meeting to be looking at is the OPEC JMMC meeting. Now, that is a key meeting for oil. If you just click open to the oil chart, we can see oil prices have been moving higher on this positive vaccine news, because obviously expectations are that the world will get moving again, the pumps will get flowing, and oil will be back in demand. Now, the last expectation from the OPEC JMCC meeting is that OPEC are discussing an extension of their production cuts for the next 3 to 6 months. So at that OPEC JMCC meeting, what we're looking for is any news about the production cuts. If those production cuts are extended, say they're 6 to 9 months, then that's going to be a positive driver for oil. Oil at the moment is driving higher on this positive Moderna vaccine news. If OPEC Plus, for instance, this JMC meeting, think we don't think we will be extending production cuts, we'd expect immediate downside in oil. So that is a key thing to be looking at coming out here on Tuesday. So look out for this OPEC JMC meeting. It has a potential to really move the oil market. And just looking at oil demand, you can see that the OPEC crude demand is predicted to be 26.5 million barrels per day for 2021. Okay. Now, the current quota, the August to December 20 out quota, is 21.8 million barrels per day. Okay. So this is what you have to watch out for. So if Libya supply grows, It's at 1.2 million barrels per day at the moment. It could grow 2.7. And if you have, sorry, sorry, I got this wrong. The Venezuela, Libya, and Iran production in October 20th, okay, was 2.7 million. Okay, Libya's supply is expected to grow in 2021. Okay, now that's pretty much there because Libya are now producing 1.2 million barrels per day, so they're pretty much there. Okay, so we're around this level, around this 25.2 million barrels per day. Now, if there's no rollover of OPEC cuts to 2021, then that takes the markets to 26.4. But if Iran is able to fully resume exports, they're currently got 0.5 million barrels per day, then that puts us into a key surplus. So another thing to be looking out for OPEC is that Libya is back online, right? If there's no cuts, or those rollover cuts don't happen, and Iran resumes exports, the oil market goes into a firm surplus of 28.4 million. Now, if the demand is only 26.5 and 27.2, you can see that oil prices will just fall because supply doesn't meet demand. Supply exceeds demand, rather. Okay, so that's a key thing to be watching for OPEC going into this meeting. So just take a screenshot of that, and you can have a look at you know, how that works. Retail sales coming out for the US. The US is a consumer-driven market, so if the consumer's doing well and they're spending money, that's positive for risk sentiment. So not going to be a massive driver, but can move the market. But that risk sentiment at the moment from Moderna is really the key driver. Have CPI data from Canada, not expected to be a major driver. Oil is a major driver for CAD at the moment. And then on Thursday, got the ADP non-farm employment change for CAD again, not a massive mover. Got some European data and got President Lagarde speaking on Friday. It's always worth marking EC Lagarde's speech. Okay, that's quite a light calendar week. So it's really the RBA key meeting and the Brexit discussions, the main meeting, and OPEC JMCC meetings one to be aware of. The sort of swing trade I like, you know, is at the moment risk sentiment pretty positive. So any retracement here, I would say here and into overnight, can be considered suitable for buying. 76, sort of 40, looking to take profit off 76.90, 77. That's an excellent place for a potential Aussie yen trade on that current risk sentiment. And again, slightly deeper pullback will be that 75.50 region. Okay, folks, that's the main things looking for the week ahead. Hope that helps and gets everybody ready for what's coming. Just check the questions. Yeah, Schwa, for the pound, sir, the Prime Minister of UK got again virus. Well, what's happened, Schwa, is Boris Johnson has been in contact with someone who has had COVID-19, so he's self-isolating. So does that mean short for the pounds? No, it doesn't. And also, you got to remember that he's already had it once and he survived that, and the treatment is now better for COVID-19 than it was when PM Johnson originally had it. So even if PM Johnson had it, you know, any downside in the pound, I expect to be very, very short-lived. It's the vaccine news, Schwa. That's the big news at the moment. Moderna, Pfizer, BioNTech, that's what the market's focusing on now, and that optimism. And particularly the fact that the new vaccine doesn't need that heavy refrigeration of -70 degrees. It can be in a regular fridge by the sounds of it. So infrastructure, much easier. Distribution, quicker. So that's what's going to be boosting sentiment at the moment. Yeah, okay. I hope that helps, Shra. Okay, very good. Thank you all very much. I'm back here again, of course, on Wednesday, and we'll go through how to identify a currency pair to trade that you can take away to use week in, week out. I hope that helps and gets us all clued in and tuned in to the market for this week. RBA, Brexit, and JMMC OPEC Plus meeting key movers for this week. I hope you all have a very good week, and thank you for coming. Yeah. Thanks, guys. Thanks, Warren. Hope you're well. Take care. Bye.